Hello and welcome back to Katie's Business Tips. Michael Lapede here on a video series, a short video series on the top 10 bookkeeping mistakes to avoid for your business. This is part one. Bookkeeping, remember, is essential for managing your business, for tracking, for knowing what to track for financial reporting, to know what to track for reporting to the government and taxes and so forth. Here are the top 10 bookkeeping mistakes to avoid, because remember, it is super important. Your bookkeeping is more important than most people think. Number one, neglecting to separate personal and business finances. We see this all the time. The business is paying for their personal expenses and, personally you're just paying for expenses on behalf of the business. No, separate your personal life from your business life. It's imperative from a tax perspective, from a CRA audit perspective, and just for your own financial reporting that could be messed up if you start conglomerating and mixing things together. Keep your business and personal separate. Have a separate bank account, have a separate credit card. The business is like a separate person, okay? Very important. Number two, failing to record transactions timely. Waiting, I don't have time to get to my bookkeeping, I'll get to it later. You know how hard that is? It leads to incomplete and inaccurate records. Imagine, there was a $5,000 transfer 12 months ago, 11 months ago, 10 months ago. I don't remember. What was that? Did you get backup? Well, I have this receipt from the bank says I transferred it. What was it for, right? The longer you wait, the harder it is to remember, and the more chance that it's going to make it harder to track things. And not only that, but if you're not on top of it, how can you make timely business decisions? How can you project cash flow? And so forth. So very important that you do your recording of your bookkeeping transactions regularly and timely. Number three, not reconciling the bank accounts. How many times this goes over and people do the bookkeeping and they're like, I got everything in there, it all looks good. And then the bank balance is like negative $500,000 and you're like, I had everything in the bank. And then you look in the bank reconciliation, there's all these transactions that were not reconciled and you're like, what? So very, very important not only to do the reconciliations, but to make sure if the stuff is in the reconciliation that doesn't fit and it's been sitting there and it's not supposed to be there, that you deal with it. Discard it, void it, delete it, whatever you have to do to make sure it's clean. And always do the bank recs because it's the only way you're going to catch things. It matches the bank statement with the bookkeeping to make sure everything's up to date and the bank balance is now accurate as well. Okay? And you should be doing that monthly, those reconciliations. Number four, misclassifying transactions. This leads to inaccurate financial reports and potential tax filing errors. Use a well-organized chart of accounts, as we talked about in another video, and use this proper accounting software to ensure that categorization and make sure if you're not sure on something, put it into an account, say maybe called Ask My Accountant or something. If you're not 100% sure, ask. It's okay to ask. And number five, the last one for this video is ignoring tax deadlines and compliance. Something you definitely don't want to do. You don't want to ignore the tax deadlines or compliance deadlines. Missing deadlines for tax filing or neglecting to pay results in penalties, interest, and potential legal issues. Very important. Keep a calendar of tax deadlines, set reminder, and considering hiring a tax professional to stay compliant. Pretty straightforward, pretty self-explanatory. Got any questions? We'd love to hear from you. In the next video, we'll get into part two.